Fahad Aliu, fixed income trader at UBA, joins me now for more market movement. Fahad, thanks a lot for joining us on the show today. Let's walk through the highlights of this week's OMO auctions. We've had two, and then we've also had the T-bills auction, 700 billion Naira on offer. This is one of the highlights of trading action we have seen here since the CBN took full control of trading activities, looking at fixed income market here. Walk us through the sort of subscription we've seen so far, the allotment, what this means for near-term market movements.
Thank you very much, David. This week has been very, very eventful, especially on the Treasury bill side. We've seen OMO auction twice this week. Earlier, we had one on Tuesday where 3.7 trillion was offered, and the total allotment was about 2.9 trillion, which shows 600 billion was offered, subscription was 3.7 trillion, and 2.9 trillion was eventually allotted, which shows the investors' appetite to invest in the OMO markets. And on Wednesday, we had another one, 980 billion was subscribed, and a total of 903 billion was allotted eventually. In total, we had 3.8 trillion out of the market this week alone from the OMO auction. And we had a maturity in OMO as well. So most of the investors from that maturity of 18th November came into the market to subscribe to the newly issued OMO.
And talking about activities in the market, let's also tilt our focus towards the bond side. Where do we see the most trading action, and how are investors positioning ahead of next week's auction?
So major focus has always been on the belly of the curve. We've seen activities mostly on the 2032 bond, 2033 bond recently, right? But going into the auction, 2030 and 2032 have been offered, right? And we expect markets to majorly focus on that 2032 because subscription for the 2030 has always been low in recent times. So stock rates at the last auction was at 15.83 for the 2030 bond and 15.85 for the 2032 bond. So we expect stock rates to hover around the same rate where it stopped last month, considering the fact that secondary market is still trading within that range. So, we don't see it, far away from the last stop rate.
And according to some analysts now, a true test of whether or not our inflation slowdown is something we can hold on to would be if we would see a rate cut at this MPC meeting. But for you now, what do you think would happen following on Tuesday with this month's deliberation, and in terms of how this might impact yield movement and overall investment sentiments in the market?
Okay, so like you mentioned earlier, we saw a decline in the inflation figures to 16.05, which is very, very impressive by the CBN, by the way. We've seen different measures put in place by CBN to try to tame this inflation, right? And at this point, the last MPC rate was cut by 50 basis points. And the market sentiment currently is that we expect a rate cut also at this next auction, maybe 50 or 100 basis points, due to the fact that the inflation has started easing out. And so as not to tighten market activity so much, we expect the MPC to come and to reduce the rates by about 50 to 100 basis points, depending on what they eventually go with. However, in the fixed income market, we do not really think this might really impact us that much, reason being that we expect the market has already priced in this rate cut, right? That is one. And secondly, there's a fresh 1.1 trillion that was approved by NAS for the federal government for borrowing. So we expect this to also push rates upward. If we see, there was an NTB auction yesterday, where 1.09 trillion was allotted, which is a lot compared to what the numbers we've been seeing lately. Market is expecting that rates currently in treasury bills, rates have gone slightly bearish, and we expect the same thing to happen also, going into the end of the year, regardless of the MPC outcome.
Okay, Fahad, we'll leave the conversation here for now. Thank you so much for your time. That was Fahad Aliu, fixed income trader at UBA.